Welcome to the Oanda MarketPulse Market Snapshot. My name's Craig Erlam, Senior Market Analyst at Oanda. Now, as you can see, there is a big emphasis today on the Eurozone and the US. We've got CPI and PPI inflation data. We've had that out of the Eurozone this morning. We've got some economic data from the US this afternoon, as well as some Fed speeches. Now, what makes this so important is what we have to look forward to in the next couple of weeks. Starting tomorrow with that ECB monetary policy decision, when we are expecting Mario Draghi to announce further monetary stimulus from the central bank, potentially in the form of quantitative easing and also another cut to the deposit rate. Now, today's CPI inflation data was unlikely to necessarily have too big a bearing on the decision. I imagine the decision to ease monetary policy further has already effectively been made. It may have had a slight bearing on the aggressiveness of the stimulus, with some suggesting they could potentially cut the deposit rate by 20 basis points and increase the asset purchases by 20 billion euros as well. So this could have potentially had an impact on this. But to be honest, the inflation data was largely in line with expectations. We did see a slight improvement in the PPI figure, or a slightly more of an improvement in the PPI figure than we were expecting. Now, this is going to be as a result of the energy price decline from last year starting to fall out the calculation. Of course, these are year-on-year readings. Given the fact that the majority of the declines in energy prices started last year, we are expecting this to now start to fall out of the readings, and therefore they should start to normalise. And also, this should start to fall out of the CPI data as well. The core CPI data actually fell to 0.9%, which is a concern for the Eurozone, and again supports the view that we need more stimulus from the ECB. But the CPI figure was 0.1%, and I would expect that now to pick up closer towards 1% over the coming months once the energy price decline starts to fall out of the data. But that's still well below what the ECB target of at or near below, but close to 2% is. So that's still therefore warrants more stimulus from the ECB if it wants to and hit its inflation target. Now, the other important data and events today comes from the US. Of course, we've got the non-farm payrolls and the jobs report on Friday. That's going to be crucial ahead of the Fed's own central bank decision in 2 weeks' time, when we're expecting Janet Yellen to announce a hike in interest rates, the first in almost a decade. Now, today we should get some early insight into what we can expect from that jobs report on Friday. We've got the ADP non-farm employment change. Now, personally, I don't think this offers as much insight as it suggests it should. We saw last month, as an example, 182,000 was well short of what the non-farm payrolls figure is. Now, when it comes to the final revisions, it may be far more accurate, but what the markets are really interested in is that first reading. So the ADP, in my view, doesn't offer great insight into, or great accuracy of the final non-farm payrolls. What it does quite often do, although it failed to do last month, is tell us when we are going to see maybe a big shift in the data. Is the market too bullish? Is the market too bearish? That tends to be what it's useful for, but of course it failed to even do that last month, so I don't pay too much attention to this, although the markets may, given how crucial Friday's report is. For me, more important is going to be things like unit labour costs and productivity, because this offers insight into effectively what businesses are paying for every unit produced. Now, while businesses in the short term can sometimes absorb these additional costs, especially if you think of the big manufacturers in the US, which are struggling due to overseas competition because of the stronger dollar right now. They may absorb some of these costs, and we may see lower profits as a result. In the longer run, these costs are expected to be passed on to the end consumer, which should lead to higher inflation down the road. And this is what the Fed is going to be focused on, given the lack of inflation that we currently have, largely driven lower, like I say, by the stronger dollar and lower inflation, lower energy prices, which it believes, and I believe is transitory. Now, the other key events today is going to be speeches from different Federal Reserve members. We're going to hear from Lockhart, we're going to hear from Williams. We're also going to hear from Janet Yellen. Now, she's got the key congressional testimony tomorrow, which I think the markets are going to be very focused on, given the fact that we're less than 2 weeks away from that all-important meeting, one day before the jobs report. But there is a speech which she's taking part, which she'll be giving today, and I think markets will be paying very close attention into comments here for any suggestion that the Fed may reconsider raising interest rates, or what it may take for them to reconsider raising interest rates in a couple of weeks' time. So I think this is something we should be very focused on for the rest of the session today. Now I am going to take a look at some charts here, and a couple I wanted to highlight really. The first is euro dollar, because we did see a move higher in this yesterday on the back of that weaker ISM manufacturing report. Now it's important to note that the manufacturing sector does only account for 12% of US GDP, so it's not a hugely important industry, although it can. What we did get from this weaker report, what we got from the contraction in the industry, is the fact that this stronger dollar is having a negative impact on the US economy and can weigh on growth in the coming quarters, particularly if we do see a rate hike from the Fed. But the fact that we saw such a move higher in the euro against the dollar, so we saw so much weakness in the dollar, does support the case, or the view that I've been alluding to over the past couple of weeks, that this is looking like an overcrowded trade. Again, we've been seeing lower momentum despite price action making lower lows, this bullish divergence which I've been highlighting previously, and the fact that just that weaker bit of manufacturing data which force markets, Fed funds futures to start to price the chances of a Fed rate hike at 75% rather than 78%. Only a small change there, still very much in favour of a rate hike. The fact that we saw such a significant move here suggests to me that this is looking like a bit of an overcrowded trade. Now, of course, we've got the ECB tomorrow, and if it over delivers like it has a tendency to, I would expect this to move back towards these 104.50 levels, or even further below, closer towards parity. But at that point, I would expect momentum to also move with it. Copper still remains in this flag formation, so no change here. The Aussie dollar did break above those 25th of November highs, and again, as I highlighted yesterday, 73.75, 73.80 for me is still looking key for Aussie dollar. It is gaining momentum at this moment in time, so we could continue to see that push on. Cable, there's very little change. As I highlighted yesterday, we did see the pullback, and now we're moving back towards this 150 level, but we're not seeing a break at this stage yet. And WTI as well, we've got that big OPEC meeting tomorrow, so we are seeing it trade within this tight range between $40 and $43, and I expect that to continue ahead of this meeting at the end of the week of OPEC, at which point they may announce that they are open to discussion production cuts with non-OPEC members, at which point we may see oil finally find a floor, given the oversupply story that's driven it so much lower over the course of the last 12 months, and the fact that storage containers are reaching capacity, which could be what drives the next leg lower should we see no action from OPEC. For more in-depth news and analysis, check out Oanda Market Pulse at MarketPulse.com. You can also find out more about Oanda and sign up for a free demo account at Oanda.com. Here you'll also get access to Oanda Forex Labs, which has a lot of great tools aimed at helping you in your trading.